You know what keeps me up at night? You sit in your room, scrolling through your phone, feeling like you are completely failing at life. You see your friends rolling up to work in new luxury SUVs or posting perfectly curated vacation photos from Bali, and you make the exact same salary they do. You wonder what you are doing wrong. It can feel like there is a secret to success you simply haven't been told. But when we look closer at the financial reality behind those Instagram perfect lives, we start to see a significant gap between the images on the screen and the numbers in the bank account. To understand where that gap comes from, we must look at the mathematical baseline of reality. In America, the median household gross income sits at $83,730. When you scale down that $83,000 figure by subtracting standard taxes, health insurance, and basic deductions, the reality gets much smaller. You are left with this highlighted block right here, roughly $5,600 of usable take-home pay each month. Keep that exact number in your head, $5,600. Now, try to mathematically reconcile that strict limit with the modern luxury lifestyles you constantly observe in your social circles. How does someone physically fit designer clothes, pristine aesthetic apartments, and weekly expensive dinners into that specific bucket of cash? The math simply doesn't work. Sustaining that highly visible aspirational lifestyle on a standard solo income requires spending significantly more than you actually make. Standard middle-class earnings simply cannot support the standard middle-class image. Let's systematically break down how quickly that $5,600 evaporates, starting with housing. To comfortably afford the typical American home right now, a household needs to gross over $116,000. But the bank will still eagerly run the numbers and tell a median earner they technically qualify for a massive loan. Buyers take that as official permission, eagerly signing up to spend 38% and in some areas over 50% of their gross income on a mortgage. It is a trap that makes them house poor the second they receive the keys. This pie chart represents the $5,600 take-home pay. The median housing cost is $2,350, pulling a massive 42% slice. Add a car. The average $748 payment pulls the next massive chunk. And people stay on this treadmill for decades. They go to the dealership, trade in a car they still owe money on, and roll that negative equity directly into a brand new loan. The dealership quietly stretches the terms out to 7 agonizing years to lower the monthly payment, ensuring the buyer pays interest on a depreciating asset. Deduct the costs of keeping that car running, $225 for insurance, a couple hundred for gas, and the remaining wedge shrinks. We're down to $2,000 for the entire month. That tiny remainder then gets eaten alive by lifestyle creep. We accept expensive conveniences as basic expectations of modern existence. The multiple streaming services, the monthly beauty subscription boxes, and the endless food delivery orders with their hidden service fees easily pull thousands of dollars directly out of a person's income every single year. Participating in this modern baseline lifestyle demands mathematical self-destruction. The financial flexibility of the average earner is effectively gone before they even buy food. This brings us to a critical question. If the math strictly does not work and the budget is gone by the second week of the month, how are people actually floating this aesthetic lifestyle? This graph illustrates a debt trap. The flat bottom line shows a tiny $60 minimum credit card payment. It feels affordable, but look at the exponentially rising curve above it. While paying that minimum, compounding interest silently multiplies their underlying debt for decades. They compound this error through retail therapy. People use constant shopping as a flawed form of emotional regulation to relieve their stress. They buy a designer bag or book a vacation to get a fast hit of dopamine, but they use debt to do it, which eventually adds to the exact financial pressure that caused the stress in the first place. But debt only covers part of the illusion. There is often a hidden structural bailout. Family. 50% of American parents with adult children are currently providing those children with regular financial support. This diagram shows a subsidized lifestyle. Here is the modest salary stream from their job. Merging in beside it is a secondary stream, averaging $1,474 a month from their parents. That functions as an invisible 36% raise. The cost of this invisible subsidy falls directly on the parents. Over 60% of the parents providing this support report they are making significant financial sacrifices to do it. They are delaying their retirement and raiding their emergency funds just to fund their adult children's present aesthetic. The hypervisible, self-made aesthetic you see online is often a misrepresentation. It creates a comparison economy where normal earners feel inadequate for not achieving a lifestyle that relies on hidden wealth transfers rather than career success. To move past the anxiety of falling behind, we have to look at the actual math of true wealth. Net worth is simply everything someone owns minus everything they owe. For Americans under 35, the median net worth is $39,000. Even for older age brackets that boast higher net worths, the reality is complex. Much of that wealth is illiquid, locked inside home equity they cannot access without selling, and retirement accounts they cannot touch without severe penalties. Look at the direct comparison on screen. The person on the left with a modest apartment, an older paid-off vehicle, and cash in the bank is objectively far more secure than the person on the right projecting success while drowning in negative balances. Understanding the mechanics of this illusion changes the context of the comparison. Once you realize the person flexing a brand new BMW might just be making a $1,000 monthly commitment to looking successful, the pressure to compete starts to feel less like a failure and more like a choice. You can opt out of the debt cycle because you see where it actually leads. If this breakdown helped you realize you are not falling behind, hit that subscribe button right now. Leave a like and drop a comment below telling me the most absurd financial illusion you have ever seen someone pull off just to look rich. Real wealth is quiet. By refusing to buy a ticket to the expensive theater of middle-class desperation, you can start building actual financial freedom. Thanks so much for watching. Keep building actual wealth, and I'll see you in the next one.